What is up, guys? My name is Gustavo from Gustavo's Finances and welcome back to my channel. Now before I begin, I do want to shout out the guys, my new subscribers, and the people who've actually been engaging in the comment section. I love to hear what you guys have to say and I love to reply to that, and I just think that what you guys have to say is equally as important as what I have to say in my videos. So thank you very much for those of you who have been engaging, because I consistently want to keep engaging with you guys. That way, you know, I can build some sort of relationship with you guys, because I believe that I can help you and you can help me. So today I want to talk to you guys about passive investing. Passive investing is basically when you invest in a fund that holds a bundle of stocks for the best diversification, and it's an easy way to invest so you don't have to worry about all of the research and work that goes into actually investing into individual stocks. Now, passive investing is basically mostly for the people who don't have the time to actually do their own research for individual companies, or also for the people who can't really handle the volatility in the stock market and in individual common stocks. So, how do you find a passive investment? So, one of the best passive investments that I believe is the S&P 500. The S&P 500 is basically something that holds 500 of the largest, best companies in the United States. The S&P 500 almost guarantees a 7 to 10% return yearly. And so why I recommend the S&P 500 is honestly because of inflation. Inflation depreciates your money by 2% every year, and so if you're not really investing, no matter what, you're losing 2% of whatever type of money you have. And I think it's a lot better to just invest in the S&P 500 because it almost guarantees 7 to 10% returns every year. So why not invest in the S&P 500 that guarantees you almost 7 to 10% return instead of not doing anything at all and depreciating your money by 2% every year. So I think the S&P 500 is a good way to start investing and a great way to continuously compound your money. Now, you can invest in the S&P 500 through a mutual fund or an ETF, an exchange traded fund. A mutual fund is professionally managed, which I am totally against because of the fees you must pay to the manager regardless if you gain money or not. So for every time they're making a change to your portfolio or a correction to your portfolio, you're getting charged a fee. So regardless if you're losing money or not, you have to pay a fee, and those fees really add up. And over time, the compound interest of those fees are going to lose a lot of money for you guys when you can just invest into an ETF yourself and for free. Now, an ETF is a fund that's basically traded on stock exchanges that holds bonds, commodities, and stocks. I personally recommend ETFs for the reason being that I influence individual investing. I believe that you should be in control of your money and you should be in control of your investing, not some manager who would technically be taking money away from you when you can just be doing this for little or no effort and for free. Now, which ETFs would I personally recommend that best reflects the S&P 500? There is something called, and these are the ticker symbols, which is basically the symbols you're going to look for in your brokerage account to find these ETFs. So ticker symbol SPY, which is the Spider S&P 500, the VOO, which is the Vanguard S&P 500 ETF, or the IVV, which is the iShares Core S&P 500 ETF. All three of these ETFs actually reflect the S&P 500, and so you're basically almost guaranteed the 7 to 10% returns every year. Also, all three of these ETFs also pay out dividends, which you can then reinvest to take advantage of that compound interest over time. What happens if there's a recession? So if there's a recession, I don't want you guys to panic. Usually when there's recessions, it always goes back up. So what I encourage is, if there is a recession going on, I would honestly buy more. I would buy more at a cheaper price, and therefore you could lower your dollar cost average, and by the time it goes back up, you would have more shares and you would have gained more money as it goes back up, along with that dividends that you can also reinvest. Now, which ETF do I personally think is best? I personally believe the Vanguard ETF is the best because it's actually the cheapest out of the two. The Vanguard ETF, which is the VOO ticker symbol, is actually around $240 right now, while the Spider ETF and the iShares ETF is around $260. So that $20 difference is a big difference, and they're pretty much all the same thing. Also, there's an expense ratio towards these ETFs, which is basically a percentage taken from your entire holding because of the ETF. The ETF a company is in charge of, and so the way they make their money is by taking a little percentage every year. And so the Vanguard actually charges a 0.04% interest, and the SPY, the Spider, charges a 0.09% interest. And so that's why I like the Vanguard ETF better, because over time the compound interest of those extra 5% is going to cost you a lot of money over time. It may not look like it, but honestly, if you're continuously investing and doing what you're supposed to do, constantly adding into your position and growing your portfolio, it's going to end up being thousands and thousands of dollars accumulated because of that extra 0.05%. So therefore, that's why I prefer the Vanguard, because it's a lot cheaper. Now, this is my TD Ameritrade account, and so you can actually do this with whatever brokerage account you have. So if you want to invest in the Vanguard, you're just going to type in the ticker symbol VOO. And as you can see right here, the Vanguard is around $240, and you can actually just go right here to buy it. You can go to quantity, how much you want. Let's buy 2, quantity 2. I'm going to review the order, and then it's going to tell me it's going to cost around $483, and so I'll place the order. I'm not going to place it because I'm not going to purchase that. And so if you want to invest in the Spider, you type in ticker symbol SPY, and you can see the Spider S&P 500 ETF. You'd also go right here and buy, and basically you just do the same thing. So this is how you'd actually just buy your ETFs. It's just like purchasing regular stocks. So it's very easy to do, and you can, and the liquidity to these stocks are very high, and so you can easily just buy it and sell it immediately and get the money for it. So it's very cool and very simple and an easy way to just invest if you don't really have the time, or if you really just don't like how common individual common stocks are in general. Now, the last thing I want to mention before I end this video is that if you're going to only be investing in an ETF, I completely suggest Robinhood, because Robinhood is commission free. So basically, when you buy or sell a stock, you're not being charged commission to buy or sell it, if that makes sense. Robinhood's one of the only apps or trading brokerages that you can buy and sell things for no cost at all. In my case, for like TD Ameritrade or for Fidelity or for anything else, any other type of brokerage account, they would cost like $6 just to purchase an ETF. And like I'm saying, over time, those $6 really add up. And so I would definitely recommend Robinhood if you just want to be, you know, a passive investor and just investing in ETFs to, you know, so you don't have to worry about the inflation, and you can actually grow your money by 7 to 10% yearly, which is amazing. That's what you look for. That's what you want when you're investing. Other than that, I really appreciate you guys watching this video. Thank you very much. If you liked it, please leave a thumbs up. If you have any questions, leave a comment down below. If you have any suggestions on what videos you want to see, please leave a comment. I would love to hear what you guys want to watch, because I'm doing this for you guys. And subscribe if you want to see more. So thank you very much, and I'll see you next time. Thank you.